Hi everybody, thanks for watching and listening again. There's been a lot of discussion and debate going on over the last few days over where we are in the gold and silver markets and in particular in relation to the US dollar. So I thought I'd just share some of my thoughts with you and let you know what I'm thinking. If you want to learn more about this and read loads and loads of interesting stuff on the precious metals markets, uranium and occasionally cryptocurrencies and all sorts of other good stuff as well, charts and analysis, then just visit my Twitter feed and click on the link there to sign up for a free newsletter. It's the Silver Chartist e-letter, loads of information on there, lots of good stuff. The next edition is coming out very shortly, actually comes out every Sunday evening, so feel free to go and sign up there for your free copy. So getting back to gold and silver, I thought perhaps what I'll look at first is my long-term view of gold. So you may have seen this on my Twitter feed already if you've been following me for a little while, and it looks at gold and the 8-year cycle, the 16-year cycle, which is obviously two lots of eight. Two 8-year cycles making one large 16-year cycle, and how that coincides with the US election dates as well, the US election cycle. So you notice the little red dots, which are numbered 1, 2, 3, all the way up to 13, and those show you where the US elections have occurred. Now, point number one was in an 8-year cycle, and that formed a low point. Point number three was an election year as well, 84, and formed a low point. Obviously, another election here, but 8 years later, the low point there, point number 5. Same again at point number 7, point number 9, which coincided with the sort of 8-year cycle low midway through the bull run from sort of $1,000 to $2,000 or so there. What am I talking about? 1,000 from $250 up to around $2,000. That formed the midpoint there at point number 9. Point number 11 was the low point in the very long and tedious correction in, well, that was 2016, late 2015, early 2016, where point number 11 election took place in the United States and gave us the low point there at around about $1,050. So we've had the election, point number 12 here, and point 13, which is to come, will coincide with the 8-year cycle low. So that being the case, I'm using this point number 13 as being comparable in some ways to point number 9, midway through a bull run and an election low. So I'd expect an upwards move prior to dropping down into point number 13, which is obviously sort of November 2024, and then a resumption, a very rapid resumption of the bull market to take us to our eventual high point, perhaps somewhere in late 2027 is my initial thinking at the moment. All sorts of interesting chart patterns here. You've got a very large arc formation coinciding with a bullish wedge, which we broke out of here and powered upwards, a little bit like Bitcoin has done just recently, in fact. And then that consolidated with a bullish flag pattern from 2011 to perhaps around about 2019, actually, when we broke out. So we've broken out of that now. That's a big pattern, and you don't break out of a large pattern like that and kind of, what am I trying to say? You know, when you do break out of a large pattern like that, the moves tend to be large and sustained. So for that reason, I'm not expecting a feeble sort of high here and then drifting back down over the next sort of year or two. I'd expect to gain much more altitude, if you like, before we dive down to put in our 8-year cycle low. So that's my big picture on gold. So turning to the US dollar and how that relates. So this was back in the early 2000s. Well, the chart's resetting there for some reason, but hopefully it'll come back. Hopefully it'll come back with my annotations as well. Looks like I'm going to have to slide all the way along and see if I can find it. Hope it's still there. Just bear with me. Very annoying when it does something like that. Just talk amongst yourselves. Yeah, here we go. So it looks as though my annotations are still on there. That's good. Okay, so in the early 2000s, the dollar had peaked. If I go back a little bit further, you can see, there you go. So the dollar index had risen through the late 1990s and into the early 2000s before putting in a topping formation here and dropping away, and it dropped into a channel, and that channel guided price all the way down to around about 80 on the dollar index in 2004, 2005, that sort of period there, early 2005. Now, that's a bullish pattern eventually when it breaks out, but it broke out and actually carried on down to around about 70 in 2008. Sort of coincided with the financial crisis, if you remember. Now, it's interesting to note that when the dollar index reaches its low point for the cycle, that doesn't coincide with the top in gold. The top in gold comes some 3 years later, and it was actually 2011. The dollar index went kind of sideways really for the next 3 years, but gold carried on rising, if you remember. It came out of the correction in 2008, and the gold price pretty much doubled after that, I think, if memory serves me correctly. So gold rose rapidly whilst the dollar index went pretty much nowhere. And that's not the first time that happened. It happened in the previous cycle as well. So when we move to the current position of the dollar index, very similar. There's a lot of comparisons. We topped out over a period of time in the period leading up to 2020. In the years leading up to 2020, we'd hit over 100, 102, 100, getting towards 103 on the dollar index, and that was the second time we'd hit that sort of level. In fact, if you go back far enough, you can see a level just marginally higher in 2016. So it's almost like a double top, very marginally lower, as you can see. As the dollar started to descend fairly rapidly here, myself and no doubt plenty of others took this to be the beginnings of the dollar bear market. Seemed a little bit early in the cycle, but nevertheless, my expectation was that we would, at the time anyway, that we would continue downwards. But of course, we subsequently had a rally in the dollar, which took us to a point almost as high. And then we've been descending ever since. Now, this period here notwithstanding, my target time for the low point in this dollar cycle hasn't changed. It's just how we get there has been a little bit sort of convoluted compared to what I was expecting. But my sort of time period for the dollar index low point is sometime around about 2024. So what I'm expecting is the dollar index to drop sharply over the next year or so, or several months at least, and then for it to probably sort of break out of this channel, bounce a little, and kind of go sideways again, a bit like it did in the previous cycle into 2024, and continue downwards, probably reaching its ultimate low somewhere below 70 on the dollar index. So initially hitting around about 80, and then with the final destination could be as low as 60, but I'd be hedging my bets at 65, 65 to 70 area, for a number of reasons, which I won't go into in just here, because that's not really what I'm trying to focus on at the moment. What I'm focusing on at the moment is this channel, and well, we started off the channel with a very sort of rapid drop and then a rapid rise before settling into it, and that was the disturbance caused by the COVID pandemic breaking, the news of the COVID pandemic and the March crash in the dollar, and then rapid rise in the dollar index, and coinciding with precious metals, which plumbed new depths. In the case of silver, down to, I think it's somewhere just above $11, which was quite crazy given the extent of money printing that's going on around the world at the moment, and currency debasement. Anyway, that's another story. What I'm watching here, and what I want to point out, is that we are in this channel, and I'm drawing it as a channel with parallel lines. ignoring that sort of entry point into the channel. Otherwise you would bring the start point of the support line down here somewhere and you'd end up with a more of a wedge shape. But the upper resistance line is the one I'm focusing on, and there are those at the moment who believe that the dollar index has hit its low point actually back in February 2018, and that we're entering a new dollar, or have entered a new 3-year cycle for the dollar index, which means that if that's the case, we shouldn't go below the February 2018 low, which was 88.25. So, or at least that was the there you go, you see it's on there, it's around about 88 point, which shows a little bit yeah, I've not quite got my line in the right place, I suppose. It's 88.25, so my red line is probably just a tiny fraction too low. Could do with just moving it up a little bit. It's very difficult to get it exactly where you want it. So we don't want to see it falling. What I'm trying to say, we do want to see it falling below that level, and we don't want to see the dollar index rising above the channel. So we don't want it above approximately 91.5 at the moment. Of course, if it goes sideways, it's sort of 90.7 or thereabouts. So it's this line that we do not want to see the dollar index breaking out and closing above. And what we do want to see to confirm that the dollar cycle has much further to fall, we do want to see it breaking below this red line, 88.25. That will confirm for me that we're going to drop all the way down to the 80 level, and we're going to complete the dollar index cycle in the normal way with at least 15 years between each cyclical low. So that would take us out, if I can zoom out completely on this. So we had a cyclical low, just bring the chart down a little bit for you. Cyclical low point here in the late 1970s, another one here in 1992, around about 14 years between the low points, and then again with another low, sort of 2008, giving around about 16 years between the actual recorded lows. So it's averaging about 15 years for the cycle. And there's a suggestion that the dollar cycle has bottomed here in 2018, which for me would give a very distorted US dollar cycle, both in terms of time and in terms of the shape of the structure. It just doesn't fit in with my expectation at all that we're going to continue down for a minimum of sort of 15 years, taking us down to a low somewhere sub 70 on the dollar index. So for my prognosis, my theory to be correct, we need this channel to play out in the first instance. So that's what I'll be watching over the next few days. Quite critically, I'll be posting this on Twitter fairly regularly. I'll alert you to any significant developments, but very, very important for the precious metals bull market, of course, and the whole sort of thesis, the whole game plan. So I'll leave that hanging in the air for now, and as I say, we'll be keeping a close eye on it. Thanks for watching, thanks for listening, and yeah, see you again soon. Bye.